Gold's taking a hit. Again, as I say, nobody can predict the future. There are too many wild cards. Trump coming into office, the whole game changed. He's talking about peace. So the fear of global war, that's gone down a bit. But again, we'll get to that. The people that he's picking are pretty war hawkish. Maybe there'll be some peace in Ukraine, but not in the Middle East. And I keep saying, when all else fails, they take you to war.
In today's news recap, silver price drops to nearly 2-month low, 100-day SMA breakdown in play. Silver attracts some follow-through selling during the Asian session on Thursday and drops to its lowest level since September 19th in the last hour. Bearish traders now await a sustained break below the $30 psychological mark before positioning for an extension of the recent sharp retracement slide from a 12-year peak touched last month. The overnight closed below the 50% Fibonacci retracement level of the August-October rally, and a subsequent break through the 100-day simple moving average for the first time since September could be seen as a fresh trigger for bearish traders. Moreover, oscillators on the daily chart have been gaining negative traction and are still away from being in the oversold zone. This, in turn, suggests that the path of least resistance for silver price remains to the downside and supports prospects for a further depreciating move. The white metal might then accelerate the fall towards the 61.8% FIBO level, around the $29.65 to $29.60 region. The downward trajectory could extend further towards the $29.20 to 25 cents area before eventually breaking below the $29 mark and tests a technically significant 200-day SMA currently pegged near the $28.65 zone. On the flip side, any meaningful recovery attempt might now confront a stiff barrier near the $30.60 region. Some follow-through strength, however, could trigger a short covering rally and allow for silver to reclaim the $31 mark, though the momentum is more likely to remain capped near the 31.20 support turned resistance. The latter should act as a key pivotal point, which, if cleared decisively, will suggest that the commodity has formed a near-term bottom and pave the way for additional gains. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button, and send a super thanks if you find our daily recaps valuable. Enjoy the episode.
What do we got? The markets. Well, they were down a bit today. Let's see. The Dow was down 207 points. The S&P 0.6, not big. The NASDAQ down 0.64. And the reason being, they say, is that the Fed head, Jerome Powell, said today, quote, "The strength we are currently seeing in the economy gives us the ability to approach our decisions carefully," meaning how they're going to lower interest rates. And before he said that, the street was betting 82.5% earlier in the day that they'd lower them another 25 basis points next month. And now that number's dropped down to 62%. The CPI is up 3.3% for the year. Okay, so let's go back to what Powell said. The strength we are currently seeing in the economy. Strength? Didn't Trump just win the election? And why did he win the election? Well, because as the cover of the Trends Journal this week shows, it's the plantation workers of Slavelandia that are broke. And they say Biden busted them. So there you go. So who's bullshitting? They said the economy's strong, but not according to the people. And again, as I said before, when the Republicans lost the midterms in 2022, you had inflation at 9%. And Biden's poll ratings were in the toilet. But again, it was the abortion issue that wasn't an issue this time. It was the economy's stupid. So I guess what Powell is saying is nothing more than a lot of, yep, because it ain't what's going on.
On the technical analysis side, silver price shows negative trades to move away and support the chances of continuing the expected bearish trend on the intraday basis. And the way is open to achieve the next target at $30.63, which represents 50% Fibonacci correction level for the rise from $26.41 to $34.85. Thus, breaking it will push the price to suffer additional losses that reach $29.64. Holding below $31.63 represents the first protection factor to the suggested negative scenario, as breaching it will lead the price to achieve intraday gains and test $32.86 before any new attempt to decline. Let's get back into the episode.
You know, gold's taking a hit. Again, as I say, nobody could predict the future. There are too many wild cards. Trump coming into office, the whole game changed. He's talking about peace. So the fear of global war, that's gone down a bit. But again, we'll get to that. The people that he's picking are pretty war hawkish. Maybe there'll be some peace in Ukraine, but not in the Middle East. But anyway, when Trump is not, Trump isn't positive a bet for gold. Some of the data here that gold's down 5%. And that's what happened back in 2016 when he got elected, and it bottomed out. It went down 12% before it bottomed. And back then, silver fell 13%. So Trump's not a positive one for gold. And what did Bitcoin do today? Yeah, Bitcoin went down a bit, but it's still way up there. It's at what? As we went on the air, it's at 87,750. And Brent crude ain't doing great. $72 a barrel, basically. Because the global economy is slowing down. So it goes back to Trump and gold. We believe, and again, we don't know, but we believe that he's going to do what he always does. By their deeds you shall know them. And he's always pushed the Fed to lower interest rates. So if the Fed lowers interest rates, the dollar, which had gotten stronger, goes down. The deeper the dollar falls, the higher gold prices go. End of story. So again, right now it's a guessing game. What's going to go on? And again, what Powell said about the strong economy, credit card debt hits $1.7 trillion. Yep. That's up over 8% from a year ago. Canada faces 15.4% jump in personal insolvencies. We're mentioning this as a global slowdown. A global slowdown. And there was two articles came out, one in Vogue about the luxury goods market has lost some 50 million consumers this year. And another article came out saying basically luxury good market's facing its first slowdown since the panic of '08. We've been writing about this in your Trends Journal now for over a year. And now it's just making the news. And again, totally out of the news. Not a word about it is the office building bust. Not a word. And that's going to bring down the banks. So people ask, where's the markets going? There are wild cards out there. And will they be played this year? Time will tell.
And that's a wrap. Gerald Celente gave us an honest breakdown of his election call miss and the data behind it. What do you think of his analysis? Did his perspective resonate with you, or do you see things differently? Let us know in the comments. And if you're here for more raw insights and bold predictions, make sure to hit subscribe. Thanks for watching, and we'll see you next time.